the bond market for the U.S. currency is actually oversold. And if we look at it on the 10-year, we're actually coming and falling. The bond market usually closes late on Friday nights, and this is the move from the late night Friday. So because this is falling, this is a good indication that, hey, the dollar is going to have some more strength.
I'm sorry, Travis, for interrupting, but this is a great idea that it just show up because I think less than 50%, I think, of the traders don't understand the correlation between the bonds and the Forex market. Can you explain a little bit more on that, maybe?
Of course. Thank you for asking. That's a great question. So regarding the bond market, or as they say on Bloomberg Report, the bonds market, and I love when they say that, but the bond market is actually the most liquid asset that we have in currencies. So if you think about anything that's microeconomics, when a government or a country actually makes money or prints money, they need to put it in a bank. So if you put it in retrospect, let's say you have a bank account, right? And you bank with whatever country you're in, your major bank, you have an account of $100. But then you want a secondary account. You want a savings account. So the savings account is actually your bond market. That's where your liquid money is, because now you can move that money in and out. And the bond market is the most liquid money that you can actually think of.
It can be, sorry, Travis, interrupting. Sorry, it can be like the cash one, yeah?
Exactly. Cash on hand, basically. Yes. Thank you. So yeah, so like Paul said, it's the cash on hand. So that's why I pay attention to the bonds. I like to look at the 2-year, the 5-year, and the 10-year. So when you have the 10-year going up, usually in correlations, you're gonna have the dollar weakening, and then in vice versa, if you have the bonds going down, then you're gonna have also the U.S. dollars going up. Okay, or whatever currency pair that you're paying attention to. So back into the bond market, like I said, the 10-year is actually pulling down slowly. It was a little correction. So this is a great indication of some strength. And if we go into the 2-year, which I've been paying attention strongly, pull this up here. 2-year note. This is a faster indicator, in my opinion, to be paying attention to. So on a weekly, we have this very, very bearish trend showing that, the US dollar is going to have some strength going on. It's continuating. So that's something to pay attention to, traders. So let's get back into the euro. USD. There we go. So we have this potential head and shoulders pattern, and I'm paying attention to this on a weekly. So here we go. Now, if we look at this on a weekly, I'll get my moving average. I like to use the 55 moving average. It keeps me on track. Because we're below this is my secondary indication that, hey, we can get bearish. But I need to break this base level of 1.14, this whole number. And I'll illustrate that with a horizontal line. Let's make that visible for everybody to see. There we go. Perfect. So this is going to be the catalyst, but as you can see here in this area, highlight that. We have some rejections in the zone. So if we can break this area on a daily, we'll be good as bears, but I'm not fully bearish until we break out this area. So I'm waiting for some important fundamental news that's coming up next week. You see here, I have Trading Economics. It's a great platform to get any trading fundamental news. I like to use it to get some great data. So if we look here on this coming week, on I believe it's the Monday, and also it's the more important Wednesday, we have the FOMC minute meeting, which is coming up at 11 a.m. So right now we're going to probably have some slow motion volume Monday, Tuesday for the U.S. pairs until this meeting happens. So after this meeting, I would say if you're trading Forex, after the lunch session in the US around 1 p.m. Eastern time. It's going to be a great time to start trading. I see some questions popping up. Just bear with me. Let me see if I can pull that up on my platform.
Oh, that's fine, Travis. I'm in charge of that.
Okay. Perfect. Thank you, Paul.
The Spanish
so,
one, we should we want to get this group in English better, but it's fine. I can answer some Spanish one, German one, French, and everything.
Yeah, I'll handle some French for you guys.
Just continue. Sorry, Travis.
Yeah, no worries. So yeah, so like I was saying, we're gonna definitely be paying attention on Wednesday after the lunch special. After this meeting, because this is where the volume's definitely going to be spiking up. And depending on where that volume is going, if it's bullish, then I will actually send an alert on Wednesday letting you guys know, hey, where our entry will be, and I'll also take profits. So this is our plan at the end of the day. Our true goal is going to be very, very bearish. And if you missed the video that I posted yesterday for the weekly review, looking at the COT report, also known as the Commitment of Traders report, we have a lot of institutional banks pushing very, very, very bearish on the euro. So that's my second indicator that I'm going to be shorting this pair. Second reason why I'm going to be shorting this pair, excuse me, as I sip my tea. Excuse me. Backstrick. Right now is a lot of things going on with the Italian banks that has people really not confident. And when people are not confident in the economy, they move their money in two places. They move their money in the Japanese yen and the Switzerland franc. I spoke about this, like I said, in the weekly video that I do on YouTube with Paul. But if I'll break that down briefly. So this currency strength, and right now the Japanese yen is truly overbought, so now they're going to have to move that money somewhere else. And if you do your own research, or I can show you on the chart that Switzerland franc is actually oversold, so they're going to be reversing that, and that's going to get into my next trading plan, which is going to be the USD Switzerland franc. But like I'm saying, because the global economy for the G7, the major pairs, the euro is going to be really weak. It's no confidence there. So right now they're going to be moving that money somewhere else. So like I said, if you missed that video, definitely check it out on our YouTube channel. We'll send you the link in the chat group. All right, so back into this. So on a daily, like I said, if we can continue bouncing off this 55 and keep moving down, it'll be beautiful. But like I said, what I see on Monday and Tuesday, we're going to have a push up in this zone. Now I'll illustrate that. We're going to push up. It's white. That's great. Let's change this color. We're going to get into this area, the 1.65. Retest that area. Come right back down. And hopefully we can get it back into the zone. Now, I don't believe we're going to break the 1.140 within this whole week. If we have that momentum, that'd be great. Like I said last video about the COT report, there's a lot of shorts sitting in a lot of these institutional banks. So we have the momentum. We just need the volume. So I'm just waiting. So hopefully we'll get that on Wednesday. So let's move on to US dollar Switzerland franc. All right, we have the US dollar Swizzy. So let's jump straight to the week. So on the weekly, US dollar has a lot of strength, but like I said, regarding Switzerland franc, because right now the Switzerland franc is oversold. Excuse me, I apologize. Too much tea. Because the Switzerland franc is oversold, and the Japanese yen is actually overbought, and those are two major safe havens regarding currency pairs. When the major currencies like Great British Pound, US dollar, Canadian are the majority of investors are not confident. They move their money or their assets into those two currency pairs. So because the Japanese yen is probably the most overbought currency pair currently, they're going to move that money to the Switzerland franc. So this is going to cause me to want to be very bearish. So right now we have this doji, and we're overbought. We're pretty close to this dollar mark. And if you go through the history on the weekly, it's rare to be any higher than the dollar. The last time we was higher than the dollar was back in 2016. So I don't see us getting to this new high. We're actually in a major supply zone here. So we just broke out of a supply zone, retesting this area of demand. So honestly, I can see this coming down as another downtrend shortly. And like I said, because of the fundamental news of the Switzerland franc going to have a potential push up. So like I said, on the COT report, you saw the last video, you'll definitely see that the Switzerland franc is actually going to have a lot of buyer momentum. So causing the US dollar to be falling weaker. But the major catalyst that we're going to need to get this is, like I said, on Wednesday. So just keep an eye out. You're going to see a lot of alerts from me and Paul on Wednesday around 1 p.m. Eastern time. Depending on your location, you'll still get them. All right. I'm going to actually pass the screen off to Paul, and those are my trading alerts.
Perfect, Travis. Okay, I mean, as well, okay, basically, on those webinars, we will have, for example, some direction or some review of the last week, and also for the upcoming week, yeah? And I will review the dollar SEK and the dollar yen. That was two of my traders this week, and looking for some opportunities also on gold, you know, because of all this, you know, this S&P 500 falling like 1,000 points in one day, Dow Jones falling like 800 points in one day. You know, this is a big volume coming in, and this is creating some very nice volatility. Yeah. And after that, after those three analyses, I would like to know if you want to have a look at any pair that we like, and for sure we can do it. Okay, everyone is here well. Look at my screen, great as well.
Yes, look beautiful, Paul. Look beautiful out here.
Perfect. Okay, we have here the dollar SEK it's like more like an exotic pair. Okay, it's more like an exotic pair, and it's very nice because when it moves, it just moves. You know, it tends to trend or to, you know, just fall 100 pips, 200 pips in one day. Well, if you take in the good direction. If you take it bad direction, well, it's a bit scary. Okay, but it's a very nice pair. A very nice dollar index correlation, okay? And well, we here in the 24 FX, we are using also some new wave analysis. New wave analysis is like the second phase of the Elliott wave trading, okay? Normally in Elliott wave, well, everybody knows like the 1, 2, 3, 4, 5, A, B, C, and all the stuff. But it's just getting like you know, not up to date. You know, it needs some more things in order to really understand what the market is doing and to understand the whole corrections of the market. Market is really complicated, but we think, or we tend to not complicate everything. But if an equation is complicated, you have to, you know, to understand, and you have to look for the solution. You know, sometimes it's very easy just only to place, for example, a simple analysis like a trend line or support resistance. That's basic. But you can just go through and go to the next level and start understanding the market, the bond market, as Travis has reminded us. and all those things that come together with the market in order to be a professional and to make a living in the near future of the market, okay? In the long term, okay? Then, well, this is like a basic explanation, okay? We are just getting started with the 24FX. We just have 1 month, okay? And nevertheless, Travis had more than 5 years trading, and me as well, okay? But we are going to give some very nice webinars like this one. I think 2 or 3 a week. We will get you informed. If you are in our Telegram channel, very nice. If not, well, we will get you informed in Instagram, all the things, okay? Then at the beginning of making an analysis, we have, for example, here it will be like the beginning of the trend. This can be the first wave, this can be the second wave, third wave up, fourth wave, and then 5, yeah? This is the 5 wave on the weekly on the dollar SEK. And then we can have, for example, some ABC, clear ABC. Okay, we're just waiting for this C wave, okay? This is a lot of pips here to the downside, okay, for the dollar index. And then for the dollar SEK, it also can retrace a little bit less and go straight up directly. But we can have, for example, here some shorts, okay? Based on this direction, on this weekly direction, I just get to the, to the daily, and I just calculate with retracement, very simple, this first impulsive wave, okay? Normally, this impulsive waves and the B wave, it will go to 0.786 and the 0.886, okay? This will give us like a clear wave, or a clear, how we say, this level is validating the wave, okay? Normally, if you just place the waves wherever you want, it's not correct. You have to take it as a measure as well in order to validate the wave, because otherwise everyone can do, just 1, 2, 3, 4, 5. But if you don't validate by, for example, percentage of by a move, then it's not correct, and you will get in trouble sooner or later, okay? Then as soon as we have the zone of the short market, this zone is giving us, okay, this wave, B wave is validated. We should start going for the C wave that more or less it can go for the 38 or the 23. And then we have an object here in this area, okay? You can make a swing, you can short and just stay with the trade all month long. This is quite complicated. You have to not over leverage your account, and you have to, to really understand the market. But in other way, we just can go for when the market just retraces and go up, we just wait and short, This can be an option or a strategy. This is very important to know which direction you're trading or which direction you're going through, in order to be more clear and to be more precise and organized, okay? If we place, for example, a trend line here, it can see, for example, it's very tricky to have it well, If we take it here, we have, for example, some space here, we have space here, and it can be not correct or not as exact as it can be, okay? Then what we can do is look for a correction before and look for the minimum before, and then just take the line about here. And this looks more correct, okay? Because once you take one point of the trend line, you have to take the next one as for example, as a support or as a second level to place a correct trend line, okay? Then we have, for example, this trend line here, okay? The market can be here, just going down, up, but as soon as they break this low, it will be a very, very, very nice short, okay? We can also try to short all those areas here, okay? This blue box, it can be, okay? But you got the idea how we are going to trade or how we just looking at the trades, okay? Then, as soon as I saw that in the beginning of the week, I just go here and just place the same strategy, okay? A little bit more complicated. We have a little bit more things, but at the beginning, you just can place another Fibonacci and just look for this amazing entry, 78 to 88, and just place the entry here. Boom. This can be the stop. The stop is not like 50 pips or 20 pips above, you know. The stop has to be above the high, okay? This is like 100 pip, okay? And then you can go for the 38 or 23. You see, the same equation that we are seeing on the weekly is looking on the 4-hour chart. How is that? Because the market is not repetitive, but it's progressive, but it can... it's all about pattern recognition, you know. We have to understand the market. We have to see what's the moment in the market, and just as soon as we have the trade, we just get it through, you know. And this is a pending order here, and this is a beautiful, beautiful, beautiful trade. It just surprised myself the quick as it falls, because I just place my trend line here and I say, well, this market maybe for the next week it will fall, but I want this price here, and well, but maybe the market, I am just starting to look at that, you know, maybe around these days, for example, the 23 of October, 22, you know, you see it here, the 18, you know, you can start to think about which day it will fall. But well, who knows where the big money is coming in, you know, it's just coming in and that's it, and you want to be in, okay? This will be very nice trade, great trade, over 200 pips, and this is over 2% of an account if you have a good risk reward or a good lottage, you know, a lot contract size, okay? If you are over leverage, well, you can duplicate or triplicate your account, but this is not the point, because you can also lose your account in one trade, you know. The important is to have, for example, 100 pips, it can be 1%. Travis and me are preparing very nice small courses, okay? Video courses and one-on-one sessions, and it will be all uploaded in a web page. And well, this will be a free service that we are giving, but in order to learn and in order to have a more detailed service, well, we also have premium services. But at the beginning, we just wanted to do all free, okay? But all only to let you know that point, okay? This will be a very nice trade. Also, the dollar yen was a little bit more smoothly, you know. It just break the trend line, you know. Just break the trend line. It corrects. You can short here, you know. It's just very basic, you know. Just short. You have 2 entries here, okay. Maybe a third one. Maybe if it breaks here, but it's already in the zone, you know. Look at that. I'm placing here these boxes, and as soon as I have it in the zone, well, maybe it can go and then it can go back up, you know. Then it's not good to trade here. It's not good to trade at all. You can be like a Superman, you know. You just take the good trades and that's it. If it's a 100-week trade, 100 pip week, perfect. It's a 50 pip week, perfect. Okay. Dollar yen is close to the 61 and 78 pips on. Yeah, correct, Juan Carlos. This could be also. I'm using here extensions. It's more precise than retracements. But yeah, if we take, for example, a retracement for the low to the high, yeah, it's also very close to 61, as Carlos says, okay? Very nice. Then it's, you know, it can give you some pips here, but it can be, for example, some news coming out, you know, just give it out and then boom, going to the upside, okay? Can just watch without audio. Oh, sorry, Ari. Travis, if you can chat with Ari, maybe, well, say that no worries. We are recording it. We will share the link as soon as we're done. Okay. Okay, this regarding the dollar yen and the dollar SEK. I'm looking also very nice, very promising trades for the next weeks. The gold. You know, if we have a look at the gold very quickly, I don't wanna waste your time here. But we have, for example, like a 1, 2, 3 wave or ABC wave. It can go up a little bit more. It looks like it wants to go up a little bit more, and maybe then continue lower, or maybe just break all the trend, you know. But it looks very, very nice, structurally speaking, to go for more longs on the gold. Yeah, it's very, very nice. It's very, very nice to go to the upside. Okay. Gold is a very scary active to trade, okay? Always we recommend, very important, 0.01 lots per $1,000 account, okay? We will, in the courses, you know, we explain this more in detail, but this can be, for example, the minimum. You can place, for example, 0.2, 0.5 as well, but it will be like over leverage a little bit, okay? And you can start slowly, and you can start building your confidence and start putting some more contracts, because what the people do is just place one contract at the beginning, and they just start slowing down the size once they see that like the account is going down. You know, there's no way to do it. It's better to have $20 week instead to having a $500 loss in a week, okay? Then once you are in the loss in your account, you have to make, for example, if you have $1,000 account, you lose $500, then you have to make like 100% of your money, because you don't have $1,000 anymore. You have $500, yeah? Then you have to do 100% of your account in order only to recover the account, yeah? This is crazy how the mathematics work, but you have to do the math, you know, my friend? Then it's very important to go small, to go slowly, and then building confidence and start trading like a long-term trader, and not like, making some bets every day, okay? Also, before trading, you have to really have a system, yeah? And this is one of the things we do. We just created 2 types of systems with a track record of more than 1 year as well. This is very important because everyone can say, well, I'm a teacher, I can teach you this, I can teach you that. If they don't have results of the past months, they are just talking bananas, as Travis and me are just talking this week, okay? This is very important also before you paying any service or paying any education programs that you see, for example, a track record that the system that they are doing, they really works, okay? Okay, regarding the gold here, I'm talking a lot of topics, but well, this is the main goal of the webinars, okay? And one important thing is, as soon as the market is broken up, if you place a retracement, is no way to get a retracement here. Well, you get this 0.27 or maybe the 0.61.8. This can be, for example, next for example, objectives of the trades, you know, can correlate here a little bit, you know. Zack, you have this trade here, okay? Sounds very clear trade. Already broke the high before, you know, it's making a new high, and this is looking very promising to the next week, going for a buys, okay? And then, well, we will give you maybe a signal on the channel to take the trade, or use your technique, use proper risk management, and to go for this trade. Okay. Which pair should we look? And then we finish the webinar. We have Bond Us, Juan, Panas. Are you short? Are you long, Juan? You short. It's quite scary, okay? But it's good because pound is retracing. Pound dollar is very strong, but Aussie dollar it tends to, you know, to just go for this direction and go more bullish sentiment here. But you have to take care because maybe the Aussie dollar is just continue lower, okay? But pound also on the short side, okay, have it already as well. Yeah, I think it's in this one. Very nice one. Very great. Yeah, I'm also. I think I took the trade, but I just take like a 20, 50 pips out and then just run away, you know. Yeah, I think it's a DeFi wave. It can go up a little bit more. Don't overconfident here because it can make something like that, and I think it will do it. Okay, I don't see it just going down right now. Okay, then you have to take it. Don't take it for a long term. Just take it. You know, the market open and you see, for example, this support level, if we want to call it like that. Maybe just break the low another time, and you just taking 75% out of the trade. Just place the break even and just continue falling. Okay. Yeah. And as soon as they break the high again, you just look for another opportunity for another trade. Okay. Look at that divergence. They have some divergence here in the two highs, but it not has a lot of divergence in the two highs above. Okay. And well, I see it a little bit more. Okay. Always have a look for a second plan B of the market. Okay, you see, I have, for example, one option to short here, but the other option is here. I prefer this one here if the market is doing. If not, no worries, because the market breaks, it will retrace, and here you have your another setup. Okay, because the market is now on the upside. Okay, so look, for example, on this correction, the market is very tricky, you know, start to go down, boom, boom, boom. Yeah, short. No, boom, you know, look at this beast. So it's a 500 pip trade, you know. Then even here, I think looking for a buy, I don't think it can be like a crazy, you know. It can be very, very nice risk reward rate. I haven't looked and I miss it out, but it works. Okay. Yeah. It's very tricky to take the corrections at the end. We have a system to trade this C waves. You know, as soon as the market just make the correction, we can make some educational videos for this channel in the near future. Also, this webinar will be in the YouTube channel. And if you're watching the recording, if you see, for example, some nice idea for us to continue growing and to continue giving some value in the channel, just let us know. Just leave us a comment, and we will do it for sure. Okay, guys. Thank you, all of you, to be part of the webinar, and see you in the next webinar. We will do it Saturday, Monday, and Wednesday. 3 webinars a week. We will get you informed what time and what type of registration, but more or less, well, it's very simple here in Zoom. You just register and you just go in, okay? Or you can just be part of our Telegram channel and we will get you updated, okay? Hey guys, thank you very much. Travis, you good? Something
I'm good. I just want to tell everybody thank you, and Paul, you did amazing. And thank you everyone for asking great questions. If you have any other questions, you can ask through the Telegram. We'll be doing more videos, like Paul said, on Mondays, Wednesdays, and Saturdays. So keep on trading.